Hello everyone, my name is Chris or Beat the Markets on eToro. It's been quite a week, not only for the markets but for myself. Obviously, I've not been able to do one of these for a while, but also for the market as well. We've had some important economic reports, so I wanted to highlight them now. So, in the United Kingdom, the consumer price inflation or CPI, which is essentially a measure of how much prices of goods and services have increased, has stayed steady at 8.7% in May. This is the same as it was in April, which might sound good, but it was higher than what the market was predicting. The market was predicting 8.4%. Just to give you an idea, this is well above the Bank of England's target rate of 2%, which we weren't expecting it to go that low, but it's still showing signs of persistence, unfortunately. So it's not an ideal situation, and it's got a lot of people worried about persistent inflation in the UK. Certain things have gotten more expensive. Within the report, we saw that the price to fly shot up dramatically from 12.6% up to 31.4%. The cost of recreational activities and hobbies also rose, as did the price of used cars. On the flip side, the cost of fuel went down, and the speed at which food prices were increasing slowed a bit as well, but they are still increasing, unfortunately. In terms of core inflation, which leaves out things that are considered volatile, like food and energy, that went up by 7.1% in May, which is the highest it's been since March 1992. Also, on a month-over-month basis, so from April to May, core inflation increased 0.7%, which was again more than what the market was expecting. In response to this stubborn inflation, the Bank of England rose interest rates by 50 basis points, taking the current rate up to 5%. Again, this increase was higher than what most were expecting. The market was expecting a 25 basis point increase. And that is now the highest we've seen rates in the UK since the 2008 financial crisis. Currently, the UK has the highest inflation amongst all major advanced economies, which is a significant cause for concern. This also caused a small contagion in the US when we had these releases, as there's a belief it has implications for US inflation as well. Perhaps that might be more sticky than expected, although I feel the UK is in a bit of a unique situation. If you think about effects regarding Brexit or the UK leaving the European Union as well, that's having a part to play in this, particularly in food inflation as well. So it's a little bit of a different situation for us, unfortunately. Looking over to the United States, the number of building permits, which are essentially permissions to start construction, were up 5.2% in May. This is a good sign after 2 months of declines. However, it's still 12.7% lower than it was in the same time last year. So that signals a slowing housing market, obviously due to high interest rates and inflation. Staying on the housing front as well, the number of projects for builders to actually start building, or housing starts as it's known, shot up by 21.7% in April. That's a big increase. It's one of the biggest increases since October 2016, hinting at a possible stabilisation in the housing market, although it's probably too early to tell off just one report. Even though the Federal Reserve have paused at the moment, there is talk of another 2 interest rate hikes. Following what's happened in the UK, those two further hikes are starting to look more likely. And the Fed Chair, Jeremy Powell's commentary also suggests that they're pretty confident that there will be another 2 rate hikes as well. So that could have implications on housing. To sum it up, both the UK and the US grappling with high inflation still, and we don't see this abating anytime soon. It's going to be a very slow process. So it's something that I will keep reporting on. Policy workers are working hard to keep the economy stable and aid its recovery. It's a very difficult balancing act to get right. The UK is going to struggle immensely because they are going to have to continue to raise interest rates, but the UK is looking at a high likelihood of a recession as a result. In terms of earnings, we had Winnebago Industries report their Q3 2023 earnings. Winnebago is a major player in the outdoor recreation world, and they sell premium products, high-ticket items, which are usually financed, so inflation and interest rates do affect this company considerably. So it comes as no surprise that Winnebago did report lower demand for RVs, although the company achieved $900.8 million in net revenues for the quarter, with a profit margin of 16.8% and an earnings per share of $2.13. That was above what the market was expecting. The company also reported a strong balance sheet with $591.7 million in outstanding debt. This was all despite a difficult RV market. Interestingly, the company reported that 70% of people considering using an RV for travel other than flights or hotels and rental cars. And that trend's expected to continue as America's increasing look to the outdoors and road trips to improve mental well-being and combat rising travel costs. So I think that's all I've really got time for in this one. I'm sorry, it's just a quick summary. There's obviously a lot going on in regard to a lot of this data, and it warrants more in-depth analysis. I have been through this data in depth, and I have been listening to Winnebago's conference call, which was quite lengthy. There was a lot of questions from analysts in regard to that, but it takes me a lot of time to repackage that information and present it either on one of these podcasts or in a post, which is why they are currently few and far between. So if you are interested in looking at these things a little more deeper, I would encourage you to listen to the conference call for Winnebago, and I'll try and keep these updates coming wherever possible. As I said previously, they're very much going to be as and when. But I hope that provides at least some information about what's been going on this week. I would probably sum the week up as one of crushing optimism, but we will see how we go on moving forward. I don't expect inflation to be going away anytime soon. It's going to be a very slow process, and that is something that I bear in mind as I try to adjust the portfolio in small amounts and looking at the long term. So anything I am doing at the moment is in regard to 2024 and beyond. So other than that, I hope you have a good day, and I will see you in the next one.